Have you ever considered investing in bonds? Perhaps you've heard the term, but aren't quite sure what it means. Let's demystify this for you. Imagine you're lending money to a friend. In return for your generosity, your friend promises to pay you back, but with a little extra as a thank you. That's basically what a bond is, except in this case, you're lending your money to entities like governments or corporations. These entities issue bonds to raise money for various purposes. It could be to fund a new project, infrastructure development, or even to manage their debt. When you purchase a bond, you're essentially giving them a loan. But unlike your friend who might give you a box of chocolates as a thank you, these entities promise to pay you back with interest over a certain period. So, in a nutshell, when you buy a bond, you're lending your money in return for some interest. Sounds interesting, right? Now that you've got a basic idea of what bonds are, you might wonder how they actually work. Well, let's dive right into it. Think of bonds as IOUs. An entity, maybe a corporation or government, needs cash. So they issue bonds, promising to pay you back with interest. This interest payment, also known as a coupon, is usually made twice a year. Now, here's the kicker. At the end of the bond's term, which we call its maturity, they'll return your initial investment, the principal amount. But what about bond prices and yields? They're like two sides of a seesaw. When bond prices rise, yields fall, and vice versa. Why? Because the fixed interest payments become a smaller or larger percentage of the bond's price, affecting the yield. So, bonds can provide you with steady income and return your initial investment at maturity. Not a bad deal, eh? Now that you know what bonds are and how they work, you might be thinking about dipping your toes in the bond market. So, how do you get started? First, take a moment to assess your financial goals. Are you saving for a new home, retirement, or your child's college fund? Your goals will help guide your investment decisions. Next, evaluate your risk tolerance. Bonds are generally considered lower risk than stocks, but they're not risk-free. If the thought of losing money keeps you up at night, you might want to stick with safer, government-issued bonds. Then, consider your investment duration. If you're looking at a long-term goal, you might opt for bonds with longer maturity periods. Once you've done your homework, you can buy bonds directly from the issuer, like the US Treasury, or from the secondary market. You can also use online platforms that make investing a breeze. Remember, the key to successful investing in bonds, like any other investment, is to do your homework and make informed decisions. Investing in bonds sounds pretty good so far, but like everything else in life, it comes with its own set of pros and cons. Let's start with the benefits. Bonds can provide a regular income stream, which can be especially appealing to retirees or those seeking a steady cash flow. They also tend to be less risky than other investments, like stocks. This reduced risk can make bonds a safe harbor when the seas of the stock market become stormy. But as we all know, there's no such thing as a free lunch. Bonds come with their own set of challenges. Interest rate risk is one of them. If interest rates rise, the price of your bond could fall. Then there's credit risk. If the issuer of your bond runs into financial trouble, you could lose your investment. While bonds can be a great addition to your investment portfolio, it's crucial to understand the potential risks involved. So there you have it, a quick and easy guide to getting started with bonds. You've learned what bonds are, how they work, and even how to dip your toes into the world of bond investing. Bonds can be a great way to diversify your portfolio and provide a steady income stream. Just remember, like any investment, they come with their own set of pros and cons. Now that you're armed with knowledge, why not explore some popular platforms like Vanguard, Fidelity, or Charles Schwab to start your bond investing journey? Don't worry, you're not alone. There's a whole community of beginner investors out there just like you, ready to take their first step into the exciting world of bonds. If you found this video helpful, give us a thumbs up and subscribe to our channel. Also, comment below and tell us what types of investments you want to learn more about. Until next time, happy investing.